You write that your research going back quite a long time finds that the market has no clear bias in favor of either party.
Exactly. So I think that if you look at the historical data, the strongest evidence that I find, if you look at political patterns, is that what matters more is energy than ideology. So there have been 9 instances of a president having served 2 full terms over the last 150 years or so. And what I find in those 9 instances is that the president delivered very strong returns in the first term. And in the second term, the returns were nearly a third of what the stock market delivered in the first term. So and the only exception was Ronald Reagan. So I think that this is the key point, which is that it really does not matter who's in office, because if you do the Democrat versus Republican as well, in fact, the returns under a Democrat president were slightly higher than the returns we have seen under a Republican president historically. So the evidence is that what Wall Street really cares about is if you have a fresh face, you get some new energy, and this is just one of the many factors that determine stock market returns.
So then how are investors supposed to react to the flood of strategist notes, which we're already getting, which argues that tax policy and the implications for earnings will, in fact, affect the trajectory of the market?
Right. So I think that's just one element. But I also feel that there are some offsetting factors to that. One is that you also have the same strategists and notes telling you that if Biden does get to power, then they expect an easing of some of the trade tensions, some of the protectionist noises. They expect some of that to ease. And then there's also the flavor of the season, which is MMT. This sort of Wall Street would love to have even easier money if that's possible. And the rising probability of getting MMT under Biden. So I think that you have these offsetting factors that, yes, the tax policy would be negative for the stock market. On the other hand, the trade policy and even monetary policy could be easier under a Biden presidency. So I think that really what's happening on Wall Street just now is that if you look at all the past elections, and we've done a lot of research on this, it shows that about 3 months before the presidential election, you always get a pickup in volatility. And the moment the election's over, regardless of almost who wins, volatility dies down. So I think that's the pattern we are once again seeing play out over the last few weeks.
Ruchir, it's Seema. I understand the historical context you're referencing, that volatility before a presidential election, completely normal. But at what point do the larger swings start to express concerns about what we're seeing in the polls?
Yeah, I don't think that the market has been very sensitive to the polls because the market was rising right through the summer months when Biden was, in fact, at the widest lead over Trump. Since then, you've, in fact, seen a bit of a narrowing over the last few weeks, and you still haven't seen the market really react to that, even though the probability of Trump winning has gone up a bit. At least it's inched up over the last few weeks. So I don't think that the market is very sensitive to who's winning, and that's really the point of the op-ed that I wrote. The market wants the election to get out of the way. The bigger fear in the market is that we end up getting a contested election, and we're going to be sitting all November figuring out who's won. I think that leads to much greater uncertainty and continued volatility than really who wins on 3rd November or whenever the election result is announced.
And your thoughts on whether a bipartisan agreement on Capitol Hill will be reached over stimulus aid before the election, especially as the fighting over what happens in SCOTUS continues?
No, I think that the probability of that is declining, and I still feel it's a bit remarkable. I think Carl alluded to this, that the economic data has been coming in a lot better than expected. Even though the level is still very depressed, it has surprised a lot on the upside consistently over the last few months. So I think the motivation for passing a fresh stimulus, and also with the increased polarization, it is quite possible that we don't have a plan in place until November. But I think the most important factor for the market is that we don't go back into reverse. We don't go back into some sort of lockdowns. I think that is what will really hurt sentiment. But as long as we sort of go through this phase where the economy opens up and we have hope of a vaccine coming through, I don't think the market will be that perturbed by not getting a stimulus, as long as the economic data keeps surprising on the upside, which it has consistently done over the last few months.